Welcome back to Growing Quality. My name is Elian, and today we will be talking about Duolingo. Now, you may have already heard of this company sometimes because, well, they are quite simply the biggest player in mobile language learning. But what do they exactly do? How do they make money? And how is their growth? That is something we will be discussing in this video as we are going to go over Duolingo as a stock analysis. Now, before we dive in too deep on the growth, we must discuss what does Duolingo do. And Duolingo basically provides a language learning app which is created to gamify well that aspect of learning. They do this with lives, with streaks, with all kinds of small games in order to keep the customer engaged with their product or the language learner engaged with learning. Okay, so Duolingo offers three tiers. Well, maybe more two and a half, but there are three. And this is the normal Duolingo, this is Super Duolingo, and this is Duolingo Max. Now, why would I say that there are two and a half tiers? Well, basically, Duolingo Max is only available in 6 countries for phones that are set in iOS and they have to have their language installed in either English, French, German, or Spanish. So that's a very limited group, and for their daily active users, they think it's about 5 to 10% of them that are even able to use Duolingo Max. Now, what else does Duolingo Max have? You have AI for more conversational learning experience. Okay, so then we have the normal Duolingo and Super Duolingo left. So what are the differences between those two? Well, Super Duolingo is basically the paid tier, and the normal Duolingo is free. Now, with the free version, you get ads and you get limited hearts. And with Super Duolingo, you get more hearts, you get no ads, and it's just a better overall experience. Now, then you also can opt in for the family plan, and this will allow you to have 5 users on there, and you can see each other's progress. Now, before we are going to dive into the growth, it's good to know this because Duolingo tracks the monthly active users and the daily active users. What they say is that they hold about a 90% market share of the mobile language learning daily active users. So they own a huge market share in it. And that brings us to the growth because they have to find ways to monetize it. Now, I talked about the subscriptions already, but they do slightly more. Um, but in terms of growth, how is this business growing? What do they do? How do they get the economics right? And the first thing we want to look at is the income statement because I already put some notes with it. But if we look at Q1 24, we can see that they did about $167 million in revenues. This compares to 115 million last year. So that is very good growth. Now, in terms of gross profit margin, last year the company did about 72% in gross margin, and this year about 73%. That's a slight uptick, but I don't know how really noteworthy that is. What is noteworthy, however, is the total operating expenses, because this year about 63% of their operating expenses covered their revenue. When we look at last year, this was still at 80%. This means that the company is really scaling in a good way because their costs are becoming a lower portion of their revenues. And that's always what we want to see because that means we get improved margins. Now, if we look at the income from operations, we can see that they had a 9.8% net margin this year, but they had negative net income last year. So they made this switch, and that is quite important to know. They are profitable, and not only on a free cash flow basis, they are profitable on a net margin basis or net income basis as well. I find that quite important. If we look at net income or operating margin, we can see that they are at about 16%. And what we can also see is that we have a net income or a diluted EPS number of 57 cents. This compares to negative 6 cents last year. So that's a huge switch. That's also because they have very low amount of shares outstanding, about 35 million, but still that's a huge turnaround. Now, what we have to figure out is how they grow. And this is more so how do they attract new customers. And I took a bit out of their, well, the transcription of their latest earnings call. And what they are saying is that there are two big reasons why they are growing as fast as they do. People tell their friends organically. So this is me telling you about how great this product is, and then you getting onto the platform. And these people stick around for longer because it has better user retention in general, and not just payer retention, but user retention. So they get both. Now, what they also do is marketing. And this is in particular brand marketing, and they do this a lot through TikTok. Now, my guess is that you are familiar with the Duolingo L, and they promote this a lot on TikTok. This is not paid promotion, this is just normal organic promotion, and they got really good with it. Now, being just on TikTok is, of course, quite some concentration risk, especially seeing what happened in the US with the ban of TikTok. But they also ventured into Instagram Reels and YouTube Shorts because they say that this is quite similar, slightly different, but quite similar, and they see great results as well from that. Now, what they then say is that they guess that their growth is two-thirds product and one-third marketing, but it's a guess what they think. Um, as they explain it, the reason it's so hard is because a lot of our growth just comes from word of mouth, and we just don't know, or it's hard to measure word of mouth growth. How much is the of that is affected by the fact that they all did something weird on Instagram versus people telling their friends. So that's why. But yes, I mean there are two main reasons we grow. That's how they say it. This is literally taken from the transcript of their earnings call. So they grow through marketing for one third and through having the best and better and most engaging product for two-thirds of their growth. Okay, so that's important to know because if we look at the summary of their well, key operating metrics, their KPIs, we can see that monthly active users grew by 35% year over year, from 72.6 million to 97.6 million. Okay, so daily active users grow by 54%, and well, that's quite the difference there. More people are using it more often because they went from 20.3 million to 31.4 million. And then the paid subscribers, which is, of course, the most important part of this business, they are about 80% subscription based. That grew 54%, so from 4.8 million to 7.4 million. But if we look at the daily active users of 31.4 million, well, there's still a lot to get there. And not only without growing the daily active users in itself as well, but just growing better into that number, having a better conversion rate. So then we look at the subscription bookings. This was up 47% year over year, and the total bookings was up 41% year over year. Now, revenues grew 45%, the gross profit grew 45% because, as I already showed you, the gross margin stayed about equal. And the net income, well, that switched from negative to positive. So that's a very good thing. And then net cash from operating activities, this went up over 100%. This more than doubled. They really print a lot of cash. And that is what we see often with this subscription-based models. They get lots and lots of free cash flow because they can optimize the business just incredibly well. So then it's time for my bull argument. I also have a bear argument I'm going to give you, and then I give you my opinion in the conclusion about this business. But my bull argument for this company is the use of AI. And let me put myself in the screen like this real quick for it. But the use of AI is something that this company really benefits from. It really benefits from the economics of AI. and not necessarily in their revenue portion or in their margins. Well, not through the sales side of the business. Because SuperDuo or Duolingo Max, as I already mentioned, uses AI for having a more conversational and engaging product. But what the company says is that the margins aren't really better. They are slightly worse, even though on a dollar basis they are about equal. Now, Duolingo Max is quite a bit more expensive than the Super Duolingo, so having the same dollar amount of margins isn't particularly great. But what AI allows for Duolingo to do is have way better product development. It's just way faster, way cheaper than having specially specially assigned teams develop new products, new language courses, or develop completely new languages for them. It's just way cheaper and easier to do through AI. They can also scan the company better for improvement points. But also, what really stands out here, the use of AI for the development of new courses. And doing so cheaper makes their expenses lower, and that in turn increases their scalability. Now, then we also have a bear argument, and that is low conversion areas. And the low conversion areas are not something that is specific to Duolingo. Because if we look at a big market for Duolingo, like India, they say it themselves that it is simply, well, how that market operates. People don't really get into the subscriptions and pay for it. That is just something they do not really do. Now, Duolingo has tried and experimented with lowering prices, doing other incentives, but conversion is simply low in a country like India. And that's a shame because it's a really big opportunity. There are a billion people living there. It's the fastest growing economy out there. And having those people learn English is, well, it's like I already said, it's a huge opportunity, but they just don't convert to paying subscribers. And that's a shame. Now, before I give you my complete opinion on Duolingo, I want to let you know that I have a way more in depth analysis of this company on my website. Over there, I have a price range where I see value for the stock. I have more bear arguments, more bull arguments, and I also somewhat highlight the management team. Now, you can access my website through the top link in my description. And with that said, well, I like this company a lot. I like their business model a lot, and I like the growth a lot. I think it's funny to see how some of the big services giants like Salesforce are currently experiencing, well, downside from the AI hype, while a small company like Duolingo notices upside from it. And that's due to the use of it and not through the selling of it. Now, what more do I like about the stock? Like I said, the growth. They grew revenue at 45% year over year. This is enormous growth, and they can do so with having, well, relatively good margins, and they have fastly improving margins. I also like the fact that they have a extremely high free cash flow margin. They had a free cash flow margin of 47.5% in the latest quarter. Now, this was quite high because they were kind of looking for investment areas, but still, it's very impressive. Overall, I have to say that what I don't really like about this company is, well, they haven't really been able to monetize or they haven't really developed the family plan, I should say. When they first started using it, they couldn't even see the names of the children in the family plan. Right now you can, but there is just way more they can do with it. And they know this and they will do it, but I think it's kind of lacking and lagging attention in important areas that they didn't do so yet. Or the family plan provides a great opportunity, if you ask me, because, well, what parents don't want their children to learn, well, languages, but now also math and music? It's a great addition to the development of their children. And having it in a gamified, fun and engaging way is a real positive for me. And that's why this stock is on my watch list. Now, if you want to stay up to date with my latest research, you can, well, make sure to subscribe to my newsletter. In my newsletter, you will get a weekly new stock analysis. So this can be Duolingo, Enphase, Shopify, Robinhood, SoFi, all kinds of stocks, mostly or basically solely growth stocks because this is where I focus on, as well as the morning market feed. This is my daily newsletter where I highlight some of the growth stocks that I cover. I highlight some news items, my opinions on things, or maybe my opinion on the overall stock market. When I see crazy shifts or I anticipate shifts, I let you guys know. Now, as I already mentioned, I only cover growth stocks, but there's a variety in growth stocks, in my opinion, because we have the more mature growth stocks like S&P Global, Moody's, Adobe. We have the more of a mid-sized, still growing, somewhat maturing group of growth stocks like Shopify, MSCI, FICO, and then we have the hyperscalers or the hypergrowers like Robinhood, SoFi, Duolingo. And these are the companies that I try to cover. Now, if these are companies that you like and you find interesting for your watch list or even as potential investments, make sure to subscribe to my newsletter. That can be done through the top link in my description below. But also make sure to like this video if you have enjoyed it and to subscribe to my channel if you've done so. And with that being said, I want to thank you for watching and I hope to see you in my next video. Bye.